Hi guys, I have breaking news for you. I've just discovered that NIO is expanding into Europe, and specifically they are going to be expanding into Norway. No other YouTuber has mentioned this yet. Nobody's really figured this out yet. The only reason I know this is because I watched 15 different YouTubers and I was able to take a little piece here, little piece there, little piece here, little piece there, put it all together, and I figured out that NIO is going to be expanding into Norway. So in this video, I'm going to tell you how I know that. I'm going to tell you what that's going to mean for NIO stock price and why they chose Norway. Guys, this is huge, huge news. Nobody's talking about this yet. You're going to hear it here first. When we get done today, you're going to want to share this video. You're going to want to tell your friends, tell your Facebook groups, tell your everybody, man. I'm telling you, this is huge, huge, huge news. And not only that, but we're going to talk about CCIV. That stock is up 60% in the last 3 days. And I'm telling you, it's just getting started. In fact, today I was able to finally put together a price target for you guys, and I think you're going to like it. For those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for Merrill Lynch and Morgan Stanley, and now I analyze stock picks from the top 15 YouTubers. I then compile all of my analysis into a daily video that I post right here on this channel. I spend hours every day watching YouTube videos so that you don't have to. All you have to do is watch this one video each day and you will get every single stock pick from the top 15 YouTubers. All I ask in return is that you hit that like button and subscribe to get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright guys, before we get into today's video, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I follow are financial advisors either. This video is purely for entertainment purposes only. Okay, let's get into today's stock picks. First up is Acer. This is a pharmaceutical company, so it won't go up unless it gets some good news from one of its current drugs that is currently in development. Unfortunately, all of their trials are still in phase 1. It has no revenues and no assets. It also is almost out of cash and could be out of business by the end of this quarter. So why am I mentioning it? Because Jack Spencer mentioned it, and I promised you that I would analyze every single stock pick from the top 15 YouTubers. That's it. Don't invest in the stock. Next up is Actc. This is an EV SPAC that is merging with Proterra. Proterra is an EV company that provides power drive chains for EV buses, and they actually have vehicles on the road. Their technology is already used in over 1,000 buses. On news that ACTS was merging with Proterra, the stock went up over 100% in one day. Obviously, we missed the bus on this one, but there are 2 takeaways. 1, the SPAC should go up and down in price as we wait for the actual merger to take place. So there should be quite a few swing trading opportunities. 2, if ACTC went up over 100% in a day, what is going to happen with CCIV when that merger is confirmed? Next up is Apxt. This is another SPAC. Tech Conversations mentioned this SPAC today, which now makes him the 3rd YouTuber to do so. They are merging with AvePoint, which is a data management company that is specifically focused on the Microsoft Cloud. AvePoint replied to a comment on Twitter of all places that the merger will take place next month. This is a classic buy the hype, sell the news. Buy the stock now and sell before the merger. Tech Conversations has a $20 price target on the stock over the next month, but Chris Sane has a $60 price target on this stock. Either way, this stock still has quite a bit of upside potential. Next up is Bngo. Bngo's symposium continues through the end of this week. Expect Thursday's news to be minor again, and expect the stock price to move around 5% or less again on Thursday. Bngo is supposed to have a major announcement on Friday, which is what everyone is waiting for. If you have some gambling money, you might want to buy Bngo in case Friday's news is substantial. Next up is CCIV. This is another SPAC, and they are merging with Lucid Motors, which is an American EV company and a competitor to Tesla. This could be the most profitable SPAC in 2021, and it certainly has been getting a lot of hype over the last few days. I already talked about CCIV in both yesterday's video and the video before that, so please watch those videos if you want more information about this stock. I just wanted to update you today with some price targets as well as remind you of the possible risks with this stock. I'm giving CCIV a price target of $45, which represents a 160% upside from today's closing price. By the way, I do expect CCIV to reach that price target within 2 months. That does, of course, assume that CCIV actually completes its merger with Lucid Motors. And that brings me to the risk, and it's a big one. If talks fall through, as they did last year when CCIV tried to merge with Dish Network, then CCIV will drop back down to its redemption value of $10. That would be a 40% drop from today's closing price. So I would recommend limiting your investment in CCIV until the talks are completed and the merger is confirmed. That said, I will let you know that personally I am heavily invested in CCIV because I do believe that the talks will complete and that the merger will be confirmed for the reasons that I gave in yesterday's video. Next up is CLSK. My financial friend likes the fact that this dipped over the last few days and thinks now is the time to buy more. He actually thinks CLSK is undervalued because they are looking to double their Bitcoin mining capacity, which will double the revenue that they are receiving from their Bitcoin mining. Next up is CLWD. This is Cloud Commerce. This is a marketing company. 5 days ago, they launched an artificial intelligence advertising platform, which caused the stock to jump over 100%. This is supposed to cut advertising costs by 50% by automatically determining the best rate of return on ads through automated A/B testing and other methods. This is actually pretty cool. And if it works, this could cause significant revenue growth. The problem is that this is a penny stock. The stock will be very volatile. Even my financial friend, who is the one who mentioned this stock, has no idea which way this stock will go next. My financial friend said he will sell his shares if the price drops to 10 cents and will take profits if the price goes up to 20 cents. Next up is CPSH. CPS Technologies Corporation is a manufacturer of advanced materials and products. This stock was basically flat over the past 20 years. Then suddenly, 2 days ago, on the homepage of Reddit, Dead Inside saw an article about NASA's Mars rover that is scheduled to land soon. That led him to investigate further. It turns out that CPSH manufactures materials that can handle extreme heat and are also very light. This makes their materials perfect for space, which is why NASA used them in their materials to protect the electronics on the Mars rover. Obviously, space travel is a growing industry, but that's not all CPS Technologies does. CPS Technologies materials are also used to protect other electronics that are susceptible to high heat, specifically power drive systems in electronic vehicles. And with EVs expected to grow at an exponential rate this year, Dead Inside believes CPS is perfectly positioned to profit from this growing industry. We also see this growth starting to take place in their third quarter financial report as this company turned profitable and projected even more growth in Q4. All of that said, this stock jumped significantly over the past 2 days on no news. I think the reason is because Dead Inside mentioned it and now a short squeeze is occurring. I do expect the stock to drop back down, so while it is a great long-term hold, I would wait for a dip before buying. Next up is Dmtk. My financial friend thinks ARK Invest might buy this stock, as they are currently buying companies with very similar to this one. Dmtk makes an at-home melanoma test kit. So if you have a mole, you can get a sample yourself from home and then mail it back to Dmtk to be tested without having to go to a doctor or get a biopsy. The big news that came out today is that the National Comprehensive Cancer Network included Dmtk melanoma testing patch in their guidelines for cancer screening, since this non-invasive method fosters early detection of cancer. That's all good news. But this stock is way overvalued right now. If you like this company, I would recommend waiting a few days for a pullback before buying. Next up is FCEL, FCEL. FCEL rose above its price target of $20 today. It is time to sell the stock and take profits if you didn't already. If you bought this 2 weeks ago when Chris Sane first mentioned it, you should be up over 70% right now. So I would like to congratulate everyone who made 70% gain in just 2 weeks on this stock. Next up is ISR. Mcash talked about this pharmaceutical stock today. As with all pharmaceutical stocks, they will rise if they get good results from trials or if they receive FDA approval. ISR announced that they are presenting at a conference this week, so the stock jumped on that news. We're still waiting to hear the results from their most recent study. Historically, during these multi-day conferences, companies will save the best news for last. And since Thursday is the last day of the conference, I do expect ISR to announce something tomorrow. If the news is good, the stock could jump significantly. If the news is bad, this stock could go back down to 50 cents. I personally think this stock has more downside than upside, but if you like trading pharmaceutical companies, this is one you might want to consider for a pre-market trade Thursday. Next up is JPM. My financial friend feels like JPM is cheap right now, and he recommends buying this stock soon. Earnings are coming up Friday, which could be a catalyst. Also, this is a dividend stock, which will give you some extra cash as well. Next up is Li Auto. Li is still well under our buy-under price of $40. Expect continued volatility in the short term. In the long term, the stock is trending upward, and StockMo thinks Li will hit new all-time highs by the end of this year. Next up is MOMO. Chris Sane likes this for a weekly call option. He recommends buying a $15 weekly call option. This isn't a big play, just a quick gainer if you have some extra cash. Next up is NGA. This is a SPAC, and they are merging with an EV company, Lion Electric. Kenan Grace mentioned this stock last week, and it ran up today because Jim Cramer mentioned it. Kenan Grace still thinks the stock has plenty of upside with a $60 price target. Just keep in mind that we have a buy-under price on the stock of $21, and it is currently well above that. And now for the news that you have all been waiting for, NIO. Informed Trades did some technical analysis today to try and select a good buy-in price. Informed Trades feels like NIO will not drop below $57 and also will not go above $67 without another catalyst. Because of this limited short-term trading range, I am reiterating my viewpoint that NIO is not a good short-term stock and is best suited for a long-term hold. From a long-term perspective, Kenan Grace let us know that 4 analysts recently raised their price targets on NIO to between $75 and $100. Also, NIO's CEO told a reporter on Saturday that NIO is going to expand into a European country soon, although NIO's CEO refused to mention which country that would be. Well, Kenan Grace found a job listing for NIO in Norway, so it looks like NIO will be expanding into Norway soon. And this makes sense, because Norway is implementing heavy government subsidies on electric vehicles. NIO's CEO also said that they are going to use this European country as a test market to learn from before expanding into other countries. Now, we already saw Tesla's stock price shoot up when they announced that they were entering Germany. Keep in mind that NIO has not yet officially announced that they are entering Norway. So Informed Trades said NIO would not go above $67 until another catalyst came along. Well, NIO entering Norway could be the catalyst NIO needs to get to new all-time highs. And the best part of all is that this isn't even confirmed yet. It's still rumors. So you have a chance to buy NIO now before the next run-up. As a long-term hold, I'm putting a buy-under price on NIO of $65 with an ideal buy-in price of $60. Also, the year-end price targets on NIO range between $85 and $250. If NIO hits the $250 price target, which they very well could if they officially announce that they are entering Norway, that would represent a 300% upside from today's closing price. Next up is NNDM. Richard Allen let us know that NNDM just received approval on a patent application that applies to the smart fabrics that we talked about yesterday. They just got approval for a patent to print a rigid, flexible printed circuit board. Flexible circuit boards are crucial to developing smart fabrics, and NNDM just got a patent on the 3D printing of this technology. So that explains why NNDM jumped over 20% today. Not only will companies be coming to NNDM to buy their printers, but NNDM will also be able to license their patents. The profitability outlook of NNDM just increased significantly. And on the technicals, we talked about NNDM converging and breaking above that convergence soon. That happened today, and NNDM technically can now reach new all-time highs with no resistance. Next up is OEG. This is Orbital Energy, and they're a solar panel company. Mcash mentioned the stock again today. Solar is one of the hottest sectors right now, and with Democrats committed to investing in clean energy, OEG is well positioned to grow. We do have price targets on OEG ranging from $3 to $25, so the upside potential is as much as 500% from today's closing price. Next up is PLUG, Plug Power. PLUG is already up over 100% from when I first mentioned this stock 10 days ago. Larry Jones thinks it could double again over the next few months. You did not miss out on this stock. Larry Jones thinks that if you buy it now, it should go up to over $100 shortly. He further put a price target on PLUG of $250 to $300 by the end of next year. Chris Sain also thinks that you should continue holding PLUG and does not recommend taking profits yet. If you were also holding FCEL, you might want to take those profits and put them into PLUG. Next up is SBE, Switchback Energy. Larry Jones thinks SBE will double this year. SBE should run up until February 11th before selling off, but then it should recover again and possibly reach $100 by the end of this year. Next up is Ttcf. This is Tattooed Chef. The stock has been fairly flat over the past month, and my financial friend thinks it's time to buy because this is the cheapest of all the plant-based food companies. Chris Sain also recommended buying Ttcf today. And let's not forget that Charlie over at Zip Trader also recommended buying Ttcf last month. Next up is WKHS, Workhorse. Jack Spencer mentioned Workhorse again today. He's obviously very bullish on this stock. So bullish, in fact, that he is dismissing negative articles about WKHS. By the way, that negative article was about the fact that Workhorse still does not have a contract with UPS. Meanwhile, General Motors, ticker symbol GM, is actually working with FedEx already. While that might not seem like a big deal at first, it is. The reason is because the pending UPS contract is the only catalyst that is pushing WKHS higher. And if for some reason UPS decides to buy their electric vehicles from somebody else, say GM, then WKHS is going to tank. To further add to the downward pressure, the CEO just sold 2.5 million shares on Monday. And if we look at the history of WKHS stock, we see it rise up significantly before selling off over and over again. Right now, it's just starting to sell off again. I think WKHS is a good long-term hold, regardless of whether or not they get the UPS contract. But I would much rather buy WKHS at $17 than at $24. So if you like WKHS as a long-term hold, you might want to wait for it to bottom out before buying. Next up is XPEV. This is a Chinese EV company. They are a competitor to NIO. It's been a little while since we talked about XPeng, so let's get an update. XPEV went up over 20% yesterday before pulling back a little bit today on news that it received $2 billion in credit from state-owned banks. This will shore up its balance sheet and improve its financials. I had a buy-under price on XPEV of $39, which it reached about 2 weeks ago. If you missed out on buying XPEV under $40, it's not too late to make money, because I do have a price target on XPEV of $70, which represents a 36% upside from today's closing price. StockMo thinks XPEV will hit new all-time highs this year. The current all-time high in XPEV is $74.49. Finally, I want to leave you with 5 dividend stocks that StockMo mentioned today. First up is China Mobile, CHL. Now you'll notice that this stock has been suspended for trading, so you might not be able to buy it. This is a dividend stock that StockMo mentioned today. The dividend is fairly high at 2.099. The PE on the stock is also quite low at only 7.49. The stock not only has share price upside potential, but also has a dividend. Next up is NLY. This is a real estate investment trust, REIT. StockMo said that this is a little riskier than most of the dividend stocks he buys, but this could bounce back nicely once COVID is over and we start to get back to normal. Next up is O. This is another real estate investment trust that has been beat down this year. The dividend is smaller than NLY, but this stock is safer than NLY since it is still profitable. StockMo recommends this dividend stock over NLY if you are risk adverse. Next up is ENB, Enbridge. This dividend stock has a high PE, but StockMo still recommends it because the dividend yield is 7.73%. Next up is EPD. This is Enterprise. This stock is starting to recover in price. The PE is still quite low at only 11. It also has an 8% dividend yield. StockMo says this may be the best dividend stock to buy in 2021. Alright guys, I hope you enjoyed this video and got a lot out of it. Guys, we have a celebration to do today because we just hit 1,000 subscribers. So put down in the comments, I want to see champagne bottles, I want to see hand claps. Let's celebrate 1,000 subscribers. Guys, we've only been posting videos for 10 days and we're already at 1,000 subscribers. This is absolutely incredible. You guys are amazing. I love you guys. Let's keep it up. If you want to get some free stock, sign up for Webull through my link in the description below. You only got a few days left to get 4 free stock. That's going to help you out. It also helps the channel out. And finally, remember to hit that like button and subscribe if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.